So we've done the first part. We go on. Then we've been told this furniture, it was sold. If you look at the additional information number 3, the household furniture was sold on 15th December 2000 for 192,000. For 192,000. So we are receiving cash, isn't it? Right? And that cash will be capitalized. So debit cash capital, 192,000. Then on disposal, we have to split them. So it's like we are closing the household furniture account, How do we close it? We've debited the cash, 192. We credit the household furniture, 180. And then credit again, which will go to the estate capital account, a gain of 12,000, isn't it? That's the double entry. Have you done that?
You said we debit the cash capital.
192,000. Then we are crediting the household furniture and the gain of the 12,000. The conventions of accounting still remains. So we said we won't be doing anything different. What ought to be debited is debited. What ought to be credited is credited. Have we done that? That is on 15th December. Then we've been told in the same month, the shares were sold on the same date, the 15th December. The shares were sold on the same date at 29 shillings ex-div, a dividend being received on 25th January. Of course, for the ex-dividend, if we buy before the due date, we are going to enjoy the dividend on our end. So this is the case, because you can see our dividends are occurring on 25th January. So what will happen? Again, we have a cash capital, isn't it? We are selling at 29 shillings. But if you look at the shares that we are selling, they were at a par value of 20 shillings, but they are now valued. The prevailing market value for the shares is 30 bob. So are we gaining or losing? Are we making a profit or a loss? We are selling at 29 shillings. They are supposed to be trading at 30. It's a loss, isn't it? We are losing, isn't it?
Yes. Yes.
So we are going to debit the cash capital. So we are selling at 29. 29 multiplied by 20,000, that will be 580, isn't it? 580,000. And then on the estate capital, we have to realize that loss. So again, we debit the estate capital. When capital increases, we credit. When it decreases, we debit. So we are debiting cash capital because we are receiving cash. Cash is a current asset. When asset increases, we debit. But our capital is reducing. This is what I'm saying. What am I sharing? What are you seeing? My Excel. You're able to see my Excel?
No.
What are you seeing on your end? I'm saying cash capital. We are debiting 580,000. Our capital, estate capital, is decreasing by that amount. So the difference is 20,000 multiplied by 1. So you can indicate here, we are selling our shares at 29 shillings multiplied by 20,000. But we are making a loss because the prevailing market value of the shares is 30. For every share we sell, we are making a loss of 1 bob. So we have debited the cash capital, we have debited the loss. So these are loss. You've seen how we've treated the gain on the realization of the freehold property. So which account will be credited? Our share capital account will be credited, isn't it? You can just say share capital. It's good to indicate which shares, KFC. So 600,000. So you can see this is the value of the shares because our shares are prevailing at 30 and they are 20,000. But we've decided to sell them ex-div. And in that ex-div, we've incurred a loss of 20,000. So to complete the double entry, we've debited the 20,000 loss, but our shares are valued at that amount. Is it clear? Is that clear? We go on. Then we've been told that there is a liability of 10,000. Liabilities, what are we supposed to do to the liabilities? We know in the TPL, trading profit and loss account, we are supposed to debit the liabilities, isn't it? They are an expense that you are supposed to incur, isn't it? But liabilities are supposed to be credited. So what are we going to do on 20th December? Two things are happening. There are funeral expenses, and then part of the liabilities are being met. We are providing for the funeral expenses, and then we are receiving some amount. So what will happen? What do we do to provisions? Guys, I'm waiting. What do we do to provisions? No, these are liabilities account. So we are going to debit the provision. So provisions for funeral. And the what's the amount? 10,000. They are 10,000. 10,000 or 20,000. They are 20,000. 20,000. Then I have the liabilities. Liabilities account. This will also be debited in the cash book. So that is 10,000. And to close this, then our cash capital will decrease because we have to pay for this amount. So I'm closing them with the cash capital. So when the cash decreases, we are supposed to credit. So our cash capital will decrease by 30,000 when I meet these obligations, right? Anything else? I think we have covered all the, is there any other item that we haven't covered? Yeah, there are those debtors. Debtors are liabilities also. We are receiving 20,000. So in receiving the 20,000, our cash is increasing by that amount, isn't it? So I'm going to debit the cash capital. Let me copy paste 20,000. Which account am I going to credit? Our debtors are decreasing. When debtors decrease, they are supposed to be credited. So to complete the double entry, I will credit the debtors account because 20,000 has already been paid. So the outstanding, they were worth 40,000. So the outstanding will be in my balance sheet. I'm going to have a current asset of 20,000 worth of debtors, right? We have adjusted the items in the summary. Now we need to go to there are those workings that we did. On 31st December, we are receiving or we are getting the interest from the freehold property. This interest that we calculated, the interest was calculated the interest. Yeah, we have this amount. The pre-death was 1333. So you need to do a double entry for that. So our cash capital, our estate cash book will be debited by 1333, and we are going to credit now the estate capital account, isn't it? Right? Is it? And what will happen to the post-death, the 66, 67? What happens? Should remember that cardinal rule. We said on the death, any assets including the accrued income up to the date of the death will be treated as capital, but any income that will be arising after that, or what we call the post-death, will be treated as income, isn't it? So our estate capital, our estate cash book, sorry, will still be debited, but we will now do that in the income column, not on the capital column, on the income column. So I can pick these two figures. Can put them here because we are debiting. So I'm saying our cash book, our estate cash book, or I just call it cash, avoid confusion, cash capital. But we know that this is going to the estate cash book, right? So that I call the other one estate cash book. But this now will be going to the income column. This is going to the capital column. That's why I've called it the cash capital. You just put a hyphen here. This will happen in the estate cash book. Once you do the double entries, completing the books will be so easy, right? So which accounts will be credited? To close this, we are going to credit our estate capital. To close this, we are going to do it in the estate income, isn't it? So estate capital. And copy paste the two. And this will go to the estate income. That's why we've been told to prepare those books. If you see at what we've been asked to prepare those books. Sure. We go on. What have we not treated? I remember there was that 10 months interest. Let me go back and peruse through my. Yeah, there is this amount. So we need to know how to treat this. So our cash capital was 2,452,800, but we are accruing an interest of 97,333. So it's like our cash capital is growing by 97,333. And then our cash income, because this will be an income post-death, our cash income is also growing by 19,467. So again, we need to document that. So I'm supposed to debit. Let me carry this figure. Seems like I'm alone in this class. Can also do it on this end, but this will grow. So I'll be talking of my cash capital will be, it was 24,52,800 plus now the 97,333. What do you get? What do you get? I need to document that because this is the estate income.
116,800.
Yes.
116,800.
116,800.
Yes.
Cannot be 116. Hii ni pesa mingi sana bwana. 24,52,800 plus 97,333. Several millions. Should be 2 point something. These two, 24,52, should be over 2.5.
2550 133.
2550
133.
133.
Yes.
So that was 24,52 800. This is supposed to be a debit, sorry. So this is the share capital for Kombo. Yeah, Kombo and Company. So we'll just say share capital. Then this one, we know that this is the estate capital. Copy this is the estate income. So that the double entry is complete. This one we get 25,69,6. 25,69,6. I think that's all. So we need to go explaining why we've done that. Our last transaction was to record the interest on shares of Kombo and Company. You know how we journalize. For example, in this one, I would expect a student to tell me this is to record interest from, from the investment that we had done on the scored the free property. So I think we are done here. Just need to now put this in the books of accounts, which is very easy because we have done all the double entry. So that was the hardest part. So the first book was, which book have we been asked to prepare? The first book, the cash book.
Estate cash book.
Cash book. Cash book. Just do it here. So I'll need the date, particulars or details. Then I have the estate capital and the estate income column. I can copy paste this on the credit side. Estate cash book. So to perfect in these questions, we said that you need to do a lot of practice. You need to get the past papers in the library and try to perfect the entries. So you can go together. Start by giving me what is in the books. The estate cash book doesn't have a lot of. We have the cash, isn't it? What cash do we have? Post death? No, pre-death. What did we have? So I'm going to debit the cash book and credit the estate capital. So the book to be credited is the estate capital. The cash that we had at birth, at death, at the point of death, we need to capitalize it. We had 500,000. We had cash in hand and cash at bank, isn't it? 500 and we had 4,000, isn't it? Are you people
Yes.
with the question?
Yes.
So this will be 504. Just added them together. No need of again doing the documentation. Then we have the furniture. What value of the furniture are we going to put in the estate cash book? The disposal value, isn't it? We are disposing on 15th. So I'm going to debit the estate cash book. We are disposing at 192. I'm going to credit with the 192. You've already done that. That was our first double entry. You go on. We have the shares. We valued the shares at 580. What is the date? The shares are also done the same date. So KFC shares. So what figure are we going to take? The absolute figure that we disposed the shares at, 580. Right? Then we have the debtors. Debtors were realized on 20th. So what amount? 20,000. is still capitalized. So we are talking of the 40,000, we minus the 20,000. That's how we are getting the, let's indicate here, 40 minus the 20. You go on. The other transaction is the investment, the interest in the investment in the free property, right? This was done on, we are doing it at the close of the year. It had been done on June, the first batch. We'll just say investment in free property, freehold property. Let me just write F Pro. Whenever you see F Pro in trust, we are talking of the freehold property. So we are talking of the 13,333. I want you to see how we are going to document. So this is the pre-death, then the post-death will be treated as income. So 6667. So kindly note that. Pre-death, we are treating it as capital. Post-death is being treated as income. Right? Same case will happen to the investment in Kombo, the same that we've done down here. I'll just pick this, but I need to write the investment. This is happening on 31st December also. Just say investment in Kombo company. What was the total investment? Because this is the interest that we are receiving. He had calculated that figure.
2336.
2336. So 2336. Then we have the investment. Now we document now the investment in Kombo, the one that we are receiving the interest for, right? So I have 90. You see the figures. 97,333. Then the other one is 19,467. Anything else? What about the dividends that we received? Our dividends, the very first, we had these dividends of 40,000. How are we going to treat them? We've been told that they are bequeathed. At some point they are distributed, isn't it? We are distributing them, isn't it? Are we distributing them the same year? Let me see the question. No, they are being distributed on, the distribution will be done in 2001 when we are closing the books. So that will not occur here. So this is what we are going to do. Let us close this period, but we have some liabilities, isn't it? We had the liabilities of 10,000, these ones. What was the date? They'll be capitalized. When were they? And the funeral expenses. What were the dates? Guys, you can't even check the dates for me. Yeah, 20,000.
Twentieth December.
20th December. Mm, 20th December. There is no any other liability, right? So we've closed that year. We go to 2001 because in the year 2001, now we are doing the distribution. So there are those dividends that we received. They were received on 25th first. I remember this. They were 40,000. So they are an income. They are coming after death. And then we are distributing forthwith. Actually, the distribution is taking place on 28th before you close the books, isn't it? They are being bequeathed. We are distributing the entire 40,000. Anything else? We can close the books. Obviously, the capital side is huge. What are you getting? This is 3742, 3742, 666, 3742. Supposed to get the column for balance carried down. Paste this. Then the income column. The income column, I have 66, 134, 134, 66, 134. So this will be my balance carried downward. Remember, this is the figure that will be reflecting, and you are going to confirm that our estate income account should balance at 66, 134. There is no two way about it. What is this minus 70,000? This is happening on 31st January. This you said was done on 28th January. What do you get? What's the difference?
$36,72,666.
You balanced our books. That is the estate cash book. Can we do the estate? The other one is the estate income. Estate income account. Right? Which book have we been asked to prepare? Estate income.
Estate income account.
So estate income account. So if you people desire to be working in a trust or a company that deals with the executorship. You should be knowing these accounts, and that's why we are taking this unit, trust and executorship, law and account. So this is estate income. Estate income will just focus on what we have received. I have received this 19. I have received these 6. I can just copy them as they are. Copy. Then I come here and paste. This is the date column. So this is on 31st January. I put it here. That first January. Machine is misbehaving. So 31st January 2001. That's when we are closing our books. So the amount there is 6667, right? Then I have the investment in Kombo. I credit the, so I'm completing the double entry, 467. Any other amount? This 2000 is not 2001. It's happening before you close the year, if you check up there. For 2001, we are doing the distribution, right? So we are doing the distribution on the shares 25th one, these dividends, right? We'll just write here investment in KFC shares. The amount is 40,000, right? This is on 25th. We don't have any other investment. So if you total this, we are getting 66,134. So you can see the figure is so automatic. It's the figure that you are getting here, the balance that is to be carried downward in the investment account. So on 31st of 01/2001, I can confidently say that our balance carried downward is 66,134, and close that book forthwith. So that one is a simpler one. The other book is estate capital. The other one is estate capital. Are you in this class, or we just close and go? Who was talking to me? Nemoipo.